Welcome back to Books and Banter, where we take a deep dive into the books you keep meaning to read and maybe glean a little wisdom and knowledge along the way.
A little bit of book-inspired banter, if you will.
Exactly. And today we're tackling Jonathan Clements' How to Think About Money, which I gotta say is not your typical dry personal finance book.
Not at all. It's refreshing, actually.
Yeah, it really is. It's more like a roadmap to building a truly successful financial life. One where, money is a tool for happiness, not just a source of stress.
That's really the key takeaway, isn't it?
Yeah, I think so. So, Clements kind of blends this personal finance advice with insights from happiness research, even a bit of evolutionary psychology.
It's a fascinating mix.
Right. So, like, right off the bat, he asked this question. I think we've all pondered it at some point. Can money actually buy happiness?
It's the age-old question, isn't it?
It is. It is. I mean, we all want to be happy, right?
Yeah.
But his answer is a little more nuanced than just a simple yes or no.
Right, because if it were that simple, we'd all be, well, a lot less stressed.
Exactly. So what does he say?
Well, he points to research that shows, happiness does tend to increase as income rises, but only up to a certain point. It's like there's this happiness threshold, and after you reach it, more money doesn't necessarily equal more joy.
Yeah, that makes sense. It's kind of like, I don't know, think about that first bite of your favorite dessert, pure bliss,
Oh,
right?
totally.
But then, after a while, even the most delicious treat, it kind of loses that initial
I
impact.
get used to it.
Yeah, you do. You get used to it. So it's really challenging, that whole more is always better mentality, especially when it comes to wealth.
It makes you think, doesn't it?
It really does. It really does. But what about the things we spend money on? Does that make a difference when we're talking about happiness?
It absolutely does. Clemens, he highlights studies showing that spending money on experiences like traveling or going to concerts or even, just enjoying a nice meal out with friends. Those things tend to bring more lasting happiness than buying material possessions.
Experiences over things. That's what I always say.
And, and if you can share those experiences with loved ones, it seems to amplify those positive feelings even more.
Yeah, I think there's something powerful about shared experiences. It's like it creates these lasting memories that you can kind of carry with you.
Exactly. It's not just about, accumulating stuff. It's about creating a life filled with meaningful experiences and connections.
Okay, so it's not just about how much money you have, but how you use it. But then Clemens throws this curveball. He introduces this whole concept of human capital.
Human capital.
Yeah. So, we always hear about like investing in our skills and education, right? But Clemens, he takes that idea to like a whole new level.
It really does.
He argues that because our ability to earn an income is actually like a 40-year bond.
A 40-year bond.
Yeah, he calls it our human capital bond. What do you think about that?
It's an interesting way to look at it, because it reframes how we think about our working years, especially for younger folks, people with steady incomes.
Yeah, they have that earning potential ahead of them, right?
Exactly, that future earning potential. It's an incredibly valuable asset, and it has a huge impact on how we should think about investing.
So how does this human capital bond concept actually play out in investing?
Well, Clemens uses it to explain why in our younger years we can actually afford to take on more risk with our investments, put more into things like stocks.
Because we have more time to recover if things go south.
Precisely. You have time to recover from any market downturns. And that potential for long-term growth, it's on your side.
So it's like having this secret weapon, in your financial arsenal early on.
You could say that.
But then, of course, as we get older, that human capital bond matures.
And we need to shift to a more conservative approach.
Right. It's like that bond is getting closer to its maturity date. So you don't want to gamble with the principal. You need to protect that nest egg, make sure it can support you, through those non-working years.
Exactly. It's all about planning for that transition because, as we approach retirement, that steady income stream from our job, it's going to disappear.
It's a big shift.
It is. And Clemens, he stresses that understanding your own risk tolerance and diversifying your investments, it becomes even more important as you transition into that phase of life.
Okay, so we've got this idea of the human capital bond, and then just when you think you're starting to wrap your head around it, Clements drops another bomb. He calls it the hunter-gatherer within.
He loved these little thought experiments.
He does. So what's this one all about?
Well, he basically argues that our brains, they're actually hardwired for financial failure in many ways. Our ancestors, they developed instincts that were absolutely essential for their survival.
Okay, like what kind of instincts?
Like consuming resources immediately, following the crowd, reacting quickly to perceived threats, things like that.
So like eat that berry now or somebody else will get it.
Exactly. But in today's world, those same instincts, while helpful back then, they can actually lead us to make some pretty poor financial decisions.
I see what you're saying. It's like our brains haven't quite caught up to the complexities of modern personal finance, right?
Right. It's fascinating, isn't it, how these ancient instincts can still influence us today.
It really is. So give me an example. How do these hunter-gatherer instincts actually sabotage our finances?
Well, think about impulse buying, that urge to splurge on that fancy gadget we don't really need, or getting caught up in a market frenzy without really thinking things through.
Oh yeah, I've definitely been there. Have you ever felt those hunter-gatherer instincts at play in your own life?
Oh, absolutely. I think we all have moments where we give in to that short-term thinking or get swept up in the herd mentality. The key, as Clemens points out, is to be aware of those instincts and to develop strategies to kind of counteract them.
Okay, so awareness is the first step. Now,
Yeah.
let's talk about some of those strategies, particularly when it comes to investing. And one of the things that really stood out to me in the book is how Clements, how he kind of takes on that conventional wisdom about actively trying to beat the market.
He's not afraid to challenge some of those deeply held beliefs.
He isn't. So he makes this clear distinction between what he calls investment return and speculative return. And honestly, I found that a little confusing at first. So maybe you could break that down for us a bit.
Sure. So investment return, that's all about the actual growth of the underlying businesses you're invested in, things like dividends and the growth of company profits over time.
Okay, so it's the real growth of the company, not just, the stock price going up and down.
Exactly. Now, speculative return, on the other hand, that's based on the belief that you can buy a stock low and sell it high, profiting from those price fluctuations.
So it's more about timing the market, right?
Exactly. And Clements, he argues that focusing on the investment return, those dividends plus the earnings growth of the companies, that's actually the key to achieving long-term success.
So it's more about investing in solid companies that are actually growing and creating value rather than trying to time the market perfectly.
Right, because trying to predict the market's short-term swings and consistently beat that average return, it's a losing game for most people, even for a lot of professionals, frankly.
It's tough to get it right consistently.
It really is. It's like trying to time the waves in the ocean, It's incredibly difficult. And it often leads to more missed opportunities and costs than actual gains.
So ride the wave, don't try to predict it.
That's a good way to put it.
And that's why Clements is such a big advocate for index funds, right? Because they offer that broad diversification, they have low costs, and they provide a way to capture the market's overall return without trying to outsmart everyone else.
He's all about keeping it simple.
Makes sense to me. So we've talked about happiness, we've talked about human capital, we've talked about investing, and then Clements takes this even deeper. He introduces this idea of minimizing subtractions.
That's another one of his great phrases.
It is.
Yeah.
What does he mean by that?
Well, he's not just talking about, chasing those big gains. He's also talking about protecting the wealth you've already built. He warns against what he calls the slow financial death.
The slow financial death.
Yeah, which is caused by things like high fees, poor diversification, and emotional trading. Those seemingly small subtractions, they can actually add up over time and really erode your returns.
Like death by 1,000 paper cuts.
Exactly. And of course, he emphasizes the importance of insurance,
Yeah.
Not just to protect against financial disaster, but to provide peace of mind. It's like having a safety net so you can focus on building a life you love without constantly worrying about what might go wrong.
Peace of mind is priceless.
Absolutely. And he really encourages people to take a close look at their own financial vulnerabilities and make sure they have make sure they have the right safeguards in place.
This has been a really fascinating dive into the first part of how to think about money. We've covered a lot of ground: happiness, human capital, investing, the importance of minimizing those subtractions. What really stands out to you so far?
I think what resonates with me the most is how Clements, how he connects these seemingly disparate concepts to paint this bigger picture of financial well-being. He's encouraging us to think beyond just, maximizing our net worth on paper. He wants us to focus on building a sense of security and freedom so that we can pursue the things that truly matter to us.
I like that. It's about using money as a tool to support the kind of life we want to live.
Yeah.
So much of what we've talked about today, it really is about, creating a life where money supports our well-being rather than being a constant source of stress. Stay tuned for part 2, where we'll explore even more of Clemens' insights on financial success and living a truly fulfilling life.
Picking up where we left off, one of the things I find most interesting about Clement's approach is how he encourages us to really zoom out and think big when it comes to our financial lives.
You're not talking about winning the lottery or
Yeah,
anything.
right. No, 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 not at all. It's more about he suggests ditching those little mental compartments we often create for our finances.
Hmm.
Like the house fund, the retirement account, the emergency fund. He wants us to see the whole picture.
So instead of thinking of our finances as these separate buckets, we should see them as one big interconnected system.
Exactly. It's like assembling a massive jigsaw puzzle where, each piece, our investments, our debt, savings, insurance, they all need to fit together.
To create this stable financial life.
Right. And he really brings back that idea of the human capital bond we were talking about. Our ability to earn an income, especially when we're younger, that's our most valuable asset.
It's like that 40-year bond generating that steady income stream.
Exactly. And it should inform all our decisions, really. How much debt we take on, the type of insurance we need, and of course, how we invest.
So a young person with a stable job, years of earning potential ahead of them, they might be able to take on more risk, right? Focusing more on those growth-oriented investments.
Absolutely. They have the time to recover from market downturns and the potential for those investments to really compound over the long term. It's huge.
But as we get older, like we said, that bond matures. We need to be more careful.
Shift to a more conservative approach.
Protect that nest egg. Make sure it'll last. But, Clements also recognizes that we're not always rational when it comes to money. I mean, we all make decisions based on emotions, sometimes outdated instincts, or just bad information.
It's human nature, right? He identifies some common mental mistakes that we all tend to make. Being overly focused on the short term, lacking a bit of self-control, believing that, just working hard will guarantee investment success.
Or even seeing patterns in the market where none exist.
Oh, yeah. It's
Yeah.
a bit of a humbling reality check, but a necessary one.
It's funny how it all ties back to those hunter-gatherer instincts, right?
Yeah.
Our brains are wired for immediate gratification, for reacting quickly. It's not always the best approach for financial decisions.
Right. And that's why he offers some really practical strategies to kind of overcome these mental hurdles. And one of the most important, developing good savings habits.
Saving. This is pretty basic.
It might sound simple, but it really is the foundation of everything. He's a big advocate for automating your savings.
Making it a regular, painless part of your routine.
Exactly. Think of it as paying yourself first, before you even have a chance to spend the money.
I like that. Almost like tricking yourself into saving.
Well, whatever works, right? And the thing is, spending less doesn't have to mean sacrificing happiness. We often spend money on things that don't really add much to our lives.
So cut back on the unnecessary stuff. And you have more to save, more to invest, and maybe even more to spend on the things you really enjoy.
It's about conscious spending.
Exactly. So what about debt? Any insights there?
Oh, absolutely. Clements encourages us to really rethink our relationship with debt. Instead of viewing it as this burden, he suggests seeing it as a negative bond.
Negative bond.
Yeah. Something that, that can actually be strategically used, especially when we're young and we have that human capital bond working in our favor.
So taking on some debt, say to buy a home or invest in education early in our careers, that could make sense.
It could, as long as you have a solid plan to pay it down responsibly over time. But, as always, he cautions against accumulating too much debt, especially as we approach retirement.
Entering retirement with a mountain of debt doesn't sound very relaxing.
Definitely not. He wants us to enter those non-working years with as much freedom as possible. And he doesn't just talk about the mechanics of saving and investing, he gets into the psychology of risk too.
Making sure we're not taking on more than we can handle.
Exactly. He talks about the slow financial death that can happen from things like high fees, poor diversification, emotional trading. Those seemingly small subtractions,
Yeah.
they can really add up over time and significantly erode our returns.
Death by 1,000 fees, you could say.
You could. And then there's the quick financial death, which could be the result of a job loss, health crisis, a market crash.
It's definitely scary to think about those things.
It is,
Yeah.
which is why he emphasizes having a good financial plan and, adequate insurance to protect ourselves. It's like building a fortress around your financial well-being.
I love that analogy.
Strong walls to withstand the daily erosion, but also a moat and a drawbridge to protect against those unexpected attacks.
So we're not just managing our money, we're actively protecting it.
Exactly. And what's really compelling about Clements' approach is that he ties all of this back to the ultimate goal,
Which is,
having enough money to live a fulfilling life.
that's what it's all about, isn't it?
It is. It's not about getting rich for the sake of being rich. It's about having the resources to pursue the things that really matter.
Yeah.
Spending time with loved ones, chasing your passions, making a difference in the world, whatever that looks like for you.
He's encouraging us to define our own version of success, one that actually aligns with our values and aspirations.
And then to make decisions that support that vision. That's really what sets Clements apart, I think. He recognizes that true financial success, it's not solely about the numbers. It's about creating a life that's rich in meaning, connection, joy, all of those things. It's not just about the money itself, is it? It's about using it to build a life you love.
Right. It's not the be-all and end-all.
It's a tool.
Exactly.
Yeah.
And Clements, he dives into some really practical advice when it comes to investing.
Let's hear it.
Well, one thing he emphasizes is instead of always chasing those, elusive market-beating returns, we should really focus on just avoiding those big mistakes.
Okay, like what kind of mistakes are we talking about?
Well, things like trading too frequently,
Yeah.
Getting hit with all those high fees, or just making impulsive investment decisions based on, emotion rather than having a solid strategy.
Letting your feelings get the best of you.
Exactly. And those kinds of mistakes, they can really eat away at your returns over time. It's like, I don't know.
It's like trying to run a marathon while tripping over your own shoelaces. Perfect analogy. You're working so hard, but you're not really getting anywhere.
You're just slowing yourself down.
Exactly. And Clements points out that in the long run, it's often the investors who stay disciplined, keep their costs low, and just kind of ride out those inevitable market ups and downs. They're the ones who tend to come out ahead.
The slow and steady wins the race approach.
Exactly. And he's a big believer in the power of compounding, how those seemingly small gains, if you just let them, they can really snowball over time.
And that's where index funds come in again, right? Low cost, diversified.
Absolutely. They offer a way to kind of capture the market's overall return without trying to, outsmart everyone else, which, as we've discussed, it's
That's a pretty tough game to win.
It is. It really is. And I think it all comes back to that analogy we were talking about earlier, planting a tree and letting it grow. You don't need to dig it up every week to check on it.
You just got to give it time and the right conditions.
Yeah, exactly. And I think that's a great analogy for how Clements wants us to approach our finances as a whole. He encourages this, more mindful, holistic approach, recognizing that true wealth goes beyond just, those numbers in our bank account.
Right. It's about our health, our relationships, our well-being. It's all connected.
Exactly. He wants us to think about, what truly brings us joy and fulfillment, and then to use our financial resources to support those things.
Travel, spending time with loved ones, being creative, giving back to the community. It's about aligning your money with your values.
Well said. So I have to ask you about that question Clements ends the book with, the one about our nomadic ancestors. What do you think they would make of our financial lives today?
That's such a great question. I mean, on the one hand, I think they'd be amazed by the abundance we have, the choices. But on the other hand,
They probably wouldn't understand half of it, right?
right, like credit cards, the stock market, completely foreign concepts.
Yeah.
But I also think they might wonder why we seem so stressed about money all the time.
With all this abundance, we still manage to worry.
It really makes you stop and think, doesn't it? Are we using money as a tool, or is it controlling us?
It's a question we should all be asking ourselves.
Well, this has been an incredible deep dive into how to think about money. It's given me a lot to think about.
Me too. It's a book that really goes beyond the typical personal finance advice. It's about so much more than that.
And on that note, we'll wrap up this episode of Books and Banter. Thank you so much for joining us on this deep dive into Jonathan Clements' How to Think About Money. We hope you found it as thought-provoking as we did.
We highly recommend checking out the book for yourselves. You might be surprised by what you discover.
Until next time, happy reading.